instead of picking a stock of the day and have both of these guys rated essentially, I noticed that today we're seeing a lot of buying in the infotech space in particular. In fact, information technology is up by about 5%. Some of the biggest moves on this local market in terms of percentage point gains are companies that have been really beaten up in 2022 thus far because of volatility, because of inflation expectations, interest rate rise expectations. So you've got the likes of IDP Education, Tyro, EML, Kogan, Xero, all looking really strong today. So my question to you is, Henry Jennings, markets today, what would you be buying in this environment? What beaten up tech, high growth name, what are you buying?
Well, one that's not just been beaten up over the last little while, but it's also being beaten up today as well, is a stock called Dubber Corp. These guys provide recording facilities for companies, and it was kind of a big winner through COVID with its ability to morph into a recording system for Zoom and out of the office kind of phone calls as well. I mean, these are always used for training and purposes, as we know, when we phone up these call centers, etc. But for me, this one really has been whacked, and it's been whacked 8% today. The prospects don't appear bad for this one, I have to say. I'm not sure why it's been whacked today. Maybe someone's downgraded in terms of their price targets or in terms of their research on this one. We've also had the Zoom results out in the US, and that did tank as well initially, but it did rebound. So I'm not sure about this one, why it's fallen so hard today when, as you say, other stocks in the information technology space are going well. I think this one is a buy at these kind of levels. It's got plenty of cash. It's got over $100 million in cash, a market cap of around $300 million. Break-even points looking at early 2024, which is not that long away to some extent. And the technology is still very, very good. Good customers as well. Annual recurring revenue is increasing. Everything is pointing to good times ahead, but the market is very much ignoring this one at the moment. So this is my tech stock that has been, I guess, beaten up too badly. It has bounced a little from the bottom today, but it's down 8%, where even the likes of PointsBet are up 10% today. So I'm quite keen on Dubber Corp at this price. DUB is the stock code.
$31.2 million loss reported in the half. That's compared to a loss of $7.5 million a year earlier. Big share-based payments, large increase in business costs. Today, to answer your question, the price target has been cut 36% by Shaw Partners to $2.67 per share. So it's sitting right now at $1.35. So there you go. That's Henry's beaten up buy of the day. What's your beaten up buy of the day, Mark Moreland from Teaminvest?
Can I give you two quick ones?
Sure.
IRI, which is Integrated Research. This is a company that we've known for a long time. They've had a very, very bad COVID. That's the best way to describe it. Most of our companies had good COVIDs, meaning they performed well or did much better than expected during COVID. IRI is a global provider of monitoring systems for big banks and data centers and a whole range of. I think they have 6 of the top 10 financial institutions in the world as clients. It has very strong moats, but they had a very bad COVID with a shift to everybody trying to set up their employees to work at home and so on. And the way they bring their accounts to their profit to account is when they sign a contract for 6 years, they're shifting into a SaaS model at the moment, but currently they bring their earnings in straight away as profit, which a lot of these companies do. And what happened was a lot of their regular customers only renewed their contracts for a short period, which meant that their earnings on paper have dropped dramatically. However, their cash flow hasn't. So they've been really slammed. They're down from over $4 now down to about 70 odd cents, roughly. And we had a meeting with the CEO the other day, and this is not a lay down misere, you're guaranteed to make a lot of money. We've got very mixed feelings about it in Teaminvest. I've actually bought some, but I would definitely consider it higher risk than anything we would normally do. But if you want something, it's definitely a tech company that has had a very good history, even though it's had some management changes and so on. And it's at a very very low price at the moment, and its current PE is on 14 on its reduced earnings. And the other one
Okay.
quickly is and the other quick one is MFG, Magellan. It's also been a fabulous wealth winner for us. Magellan's returned 47% compound average return over the last 10 years, up until this last drop, with including dividends reinvested. So that's a total return. So it's been a spectacular investment for us. Since the price has dropped down to $18 and so on, that cumulative total return for 10 years is still 32%. So in other words, as long as you bought it ages ago, the return's been spectacular because it's paid very good dividends. It's currently down at a P, I think, of 7 at the moment, MFG, and I think it's dramatically oversold. There's an expectation they're going to lose more funds under management, which they will, but I don't believe it'll be anything like the market's priced in. And we're showing it returning high double-digit returns from here going forward on a margin of safety on our most conservative setting. So this is for me, Magellan is a far lower risk compared to IRI, but I think they'll both do really well.
Well, interesting, because just today we do have UBS out with a note. It's got a sell on the company. Target price of $15.40. It points out those funds under management declining. It points out the fact that Morningstar has double downgraded the fund to bronze. Again, talking about the outflows and really interesting because Magellan is dividing the market right now. And UBS, for one, is still anticipating more of those fund outflows. Why would it?
I think Nadine, the advantage of course, with the market is the last thing we want is a consensus view. In fact, when the consensus is negative, it's usually wrong. So not always, but usually. So we make our own judgments based on the facts as we see them. So as far as the other brokers and so on having a negative view, I'm not surprised.
Yeah, interesting though, because there's a lot of people out there that would say, why wouldn't you wait till you see those funds under management start to increase before you would put a buy on it?
The reason is if you wait, you won't be able to buy it at these prices because the market's forward-looking. So it's like the travel business. When we had the corporate travel and flight centre dropped up by about 80% on COVID, nobody waited for the planes to start flying again. Within 3 months, they were back to where they were prior to COVID starting, and they're still losing money. So that's the problem. You can't. The theory sounds good. Let's wait till we see the businesses doing well. But by the time that happens, the price is back up, and it'll be back at $30 or $40 by then.
Okay, well, I don't want to consume all of our chat with Magellan, but I know everybody out there is always saying, why don't you just get some buys from your guests? So I've just done that, 2 from Mark Moreland and 1 from Henry Jennings.